Right. Thanks for that, Harsh. And yes, let me move on and let's talk about what the markets actually hold for us in the times to come. And a very special guest joining us today in the studios as we get ready to light the diyas this Diwali and ring in the Samvat 2082. It's also time to celebrate not just wealth but wisdom and the ability to invest with patience, with conviction and gratitude. Our guest today in the studios has long championed that philosophy. Navneet Munot, Managing Director and CEO at HDFC Mutual Fund and AMC, has spent over 3 decades guiding investors through cycles of change, from the rise of SIPs to India's deep tech dawn. He joins me to share his outlook on the markets, the economy, and the deeper meaning of investing in India's growth story. Navneet, pleasure having you in the studios today, and happy Diwali to you.
Happy Diwali, Aisha, to all of you and all your viewers.
Yes.
Thank you so much for having me. It's always a pleasure to be here.
So is it going to be prosperous? Because at an index level, people are a little disappointed. The year ahead, that is.
If you look at the calendar year so far, Nifty is up around 8% or so. Mid-cap index is up 3%. Small cap is down 3%. I think at the beginning of the year, we talked about a year of consolidation with large caps doing relatively better than the small caps. I think a part of the market which had a lot of froth, I think that has got cleaned up to a large extent. And from here on, I think the policy initiatives and the domestic flows will support the market. But the global environment, primary supply, and the valuations will cap the large gains. So we remain in consolidation, but with an upward bias.
Good to hear that. You know, Navneet, just taking a leaf from your previous note, the real hero, or rather the person of the year this year, and I think a very strong contender, is the SIP investor, right?
Of course, for the last several years.
Right. and I want to talk about that, and I'm awaiting your new note, whether the person of the year will be the SIP investor once again or not. You know, we've seen record SIP inflows. Even in a market like this, it's the retail investor who had conviction in the India story. But how do you assess the quality and staying power of this money? Because it's become very critical for us now.
I think in your beginning comments you made, you spoke a couple of words, and if I remember a few of them, one was conviction and one was gratitude.
And patience.
And patience. I can say that the conviction and the patience for the investors and people like us need to have deep gratitude towards them. They are the ones who provided resilience to the market. Since 2021, domestic institutions like ours have put in $240 billion in a period where foreigners have sold $25 billion. And if you look at the SIP returns over the last several years, despite the volatility, I think they have been proved right. And over the next several years, I remain convinced about India's economic fundamentals, the trajectory of corporate profits, and I think investors will be proved right. You talked about the quality of flows. The best part of our flows increasingly is that larger part of the flows are coming in the form of SIPs. 10 crore plus accounts, 29,200 crores. The average ticket size is 2,900 rupees, and that's the resilience. So both in terms of amount and the number of accounts have continuously been inching up. But we know we have a long way to go. There are still only 5.5 crore unique investors. So on one side we can celebrate, on one side we have a huge responsibility to reach out to many more households over the next several years.
Yeah, with people at the helm like you. But tell me, what about the staying power of this money? Because, you know, these investors from the COVID lows have not seen a big correction come by. You think they'll be able to withstand and actually be patient and see through the market cycle?
So over the last 30 years, typically, the mutual fund investors also, like stock market investors, used to ask 2 questions to us, like people like us who were fund managers. Abhi laga dein ya wait kare? Like, should we invest now or should we wait? And the second question after market has run up for a year or two, it would be profit book kar le ya wait kare? But now it is very different. Last couple of years, I don't hear that from people. I've quoted this earlier that people used to say when your driver gives a tip, that's a time to sell. Now my driver has been doing a
tip in the lifts.
He just started a restaurant in Khopoli, and I feel so positive about it.
Right. But, you know, just purely in terms of an investor behavior, do you think easy money years may have sort of created that very unrealistic real return expectations, which only got challenged this calendar year.
That's a very important point, because if you go back a year and you were seeing 1 year, 3 year, 5 year returns
everything
like
was
20, 25,
right?
30%. And people shouldn't have extrapolated that. This is what has been the message from our industry to everyone, that return expectations have to get moderated. Your returns cannot be substantially higher than the corporate earnings growth, and valuations had reached a level where expectations had to get moderated. This is what has happened. The heartening feature is, despite the volatility and the correction in the market over the last 1 year, I think we are seeing continuously inching up of both, as I said, number of accounts as well as the money coming in through the SIPs. So these investors, our assumption is, are coming for the long haul. They don't want to get swayed by the volatility. I think they want to take advantage of the volatility. It doesn't make sense to be smarter than the rest. It's more important you are disciplined than the rest. And I think that message is reaching out to more and more people in India.
But it's a unique time, because you wonder, equity, and then you look at gold and you look at other asset classes like Bitcoin, and you feel like, was I in the right one or not? Or if you look at US equities, for instance, led by the Fab 10.
So one is that the trade is that the world is going to get through a de-dollarization, and that's why you need to buy precious metals, Bitcoin and other things. And the other trade is that AI is the most transformational force humanity has seen. So anything related to AI, you need to invest. That's why on one side you have seen precious metals and Bitcoin. On the other side you have seen where money has gone this year. It's US, China, Taiwan, Korea, Japan. And if you look deeper into those markets, the trade is the AI related trade. I think AI is both overhyped as well as underhyped. Overhyped as well as underhyped. Overhyped in terms of the investment potential of some of these companies and the money that's going into the infrastructure. Underhyped still in terms of its long-term positive implications on efficiency of economy or the productivity gains for humanity. So it's both overhyped and underhyped. I think at some point in time we are going to see a reversal of the trade, where people say, I need to look beyond a couple of these stocks which are directly linked with the AI. India will be the use capital of the world. We have taken advantage of the investment that was made in network, in fiber, in internet, and we created an outstanding digital public infrastructure and a great software services industry in India. Something similar might happen in the AI also. On the precious metals, is very interesting. Last 5 years, let's say gold would have gone up like 150%. On theory that dollar would depreciate, you need to be concerned about dollar. Dollar has been flat for 5 years. It's gold and silver going up every day.
There's lots of others like geopolitical risk,
of course. So all of that, there is in an uncertain world. But I mean, look at the geopolitics on the one side. On the equity market should have get impacted a little more than gold and silver alone.
So, yeah, absolutely. But I want to just get back to the point that you were making about AI, right? The positives, or rather the undervalue and the overvalue. Is it going to come at the cost of the Fab 7 finally correcting? Or, as many are saying, that the bubble is waiting to burst. Is it going to come at the cost of that? Because if that were to happen, that will have serious implications on US equities and perhaps the rest of the world equity markets.
And there are striking parallels with the late 90s when internet was the next new thing. But where you invested in the name of internet, those companies didn't do well for several years. Some of them were real big winners, and they turned out to be good investment. Let's say an Amazon, which was like, had internet not been there, Amazon wouldn't have been what it is today. But at the same time, there were hundreds of the .com. Let's say even the large networking company, Cisco, didn't deliver anything for the next 15 or 20 years. It took 16 years for Microsoft to get to the same price. Ultimately, it did a lot of good to the humanity. But several of those stocks got overhyped. I think something similar is happening in AI.
Okay. And the
this time
repercussions
very
for the rest of
interesting
the world?
For India in particular. It's very interesting. I think in 2000, we were playing the same rally. In India also, technology stocks were going up. There was a big tech boom in the world. And we fell more than the rest of the world. Nasdaq fell, but I think Sensex fell more than Nasdaq in that year. If you see in 2006, 7, 8, the global boom in commodities, infrastructure and all of that, emerging markets doing well, India played the same trade. People were saying India would get delinked, India would get would be treated differently, decoupled, but it didn't happen. We fell more in 2008 than many other markets. This time could be slightly different because India is not playing that AI bubble the way it is in several of the other countries.
Interesting. So you think
and
India could be that island of safety and money could come here.
So this time when the rest of the world falls, historically, I mean, India has always participated in the global boom and the global bust. I think if this time anything happens outside India, there's a possibility India comes across as a beneficiary, because this time the focus is on boosting domestic consumption and domestic investments. And maybe thanks to the tariff tantrum of Trump, I think India is doing right kind of things by boosting domestic consumption. Look at some of the FDI deals, money coming in from Middle East, large check you have seen over the weekend, the news, money coming in from Japan. Google is announcing a large data center in India. I think the FDI is turning.
Yeah, it is indeed, sure. But I just want to, get back to the global market point that you were making. How steep could the correction be? Purely because that will also somewhere dictate FII flows. Sure, India could find, lots of dollars pouring in equity flows. But how, given that, it's these 7 stocks which have held the US equity markets up, if they begin correcting, we're staring at quite a 40-50% kind of decline. I don't know. What's the number that you think it's going to be?
So many things. In my last year's letter, I wrote that we are on the cusp of a large investment boom in the world last year.
Yes.
And this will be driven by the AI-related investment. This will be because of the climate change transition. This will be because of defense spending and supply chain diversification. These 4 large forces would lead to. It has played out. It has happened in Europe. It's happening in many parts of the world. I think there's a possibility that India now is a beneficiary because I think we are taking the right steps on the policy side, and India comes across as a contrarian bet compared to some of the themes that have been working in the rest of the world.
So to play India, you've got to play the domestic trade, you're saying? Or could this AI fall in the Western world be the start of the AI investment in India? Or these stocks coming into
India will be the use capital of the world. India will be working on creating the same leveraging the digital public infrastructure. And I think the exponential gains can come from the use of AI on that.
Sure. I also want to, talk about you've often said that, pockets of value are emerging right now in the markets, right? We've come out of a long 1-year sort of very sedate move, not just on the index, but earnings also have finally lagged. Now you're seeing signs of earnings finally pick up. Do you think it's the domestic pockets that one needs to be staying put with? I
think there are 3 years of 20% CAGR on earnings. This was the year of consolidation, single-digit earnings growth. From here on, I think earnings grow in line with nominal GDP growth. Nominal GDP has come down because of the lower inflation. India cannot afford 1.5% inflation continuing for long. Policymakers are reflating, which is generally good for markets. And at some point in time, you are going to see double-digit nominal GDP growth this year and earnings growth in line with that.
Okay, great to hear that. Debt versus equity. That's the other piece, right? How do you play that? Equity valuations are not running as high as they were up until the start of last year, but they're not cheap either. And at the same point, everyone's wondering whether you need to have a balanced portfolio, debt, equity, which way do you need to go? What's your outlook?
I don't think one needs to switch between one to another asset class. For investors, our industry has been propagating, and now investors have also been following the path of asset allocation. You need to have money across asset classes. If there is any learning in last several years is that the benefits of asset allocation cannot be underestimated. Look at what has happened in gold. A few years back, when gold wasn't doing well, equities were doing exceptionally well, then people would say, why to invest in precious metals? They don't deliver any returns. Or when interest rates were going up, people thought, why do I need to have fixed income in my portfolio? You need to have all at different points in time, different asset classes do well, and the best way to create a portfolio is to have all asset classes
Exposure
in your
to them
portfolio.
all.
Yeah, but it depends on each individual's return expectations, time horizon, risk appetite, liquidity preference, so on and so forth. But it's important to have exposure to all asset classes.
The other thing I also wanted to know your opinion was on active versus passive investing. You know, there's this whole debate about what's going to work in the year ahead. Do you think India will always be a stock picker's market, or do you think index investing or passive investing is going to work?
I think I always give this parallel of 1980s in United States as far as asset management industry is concerned and what's happening in India. And everything is likely to grow. Active will grow, passive will grow. You will have alternatives within that private equity and venture capital. You will have real assets. Everything is likely to grow. An economy going from $4 trillion to 20, 30, $40 trillion, and an incredibly beautiful capital market, institutional framework, outstanding regulators, transparency, all of that will lead to a substantial increase in asset management industry, and almost all segments are likely to grow. Within that, I strongly believe that active management has a great future in India. Over the last 30 years, we have delivered outstanding alpha. I don't see any reason that India won't remain a stock picker's paradise for people like us who invest in research capability and who play the time arbitrage. Looking beyond next few quarters and few years, I think there is still a lot of opportunity. Another interesting thing about the domestic flows is that this will also ensure that primary market remains robust for a long period to come. So the universe is expanding. At our end, at HDFC AMC, I can see in my investment team, the number of stocks in our universe has been expanding continuously. We may not be participating in all IPOs, but it just get added to the universe, some of them. And as and when valuations turn favorable, we're keeping an eye on them.
And long live the capital market theme as an investment?
I think so. I mean, as you mentioned, save, invest, prosper. I think this is where the country is moving from a nation of savers to a nation of investors. And that's where prosperity for all. And this is how we'll make our growth more inclusive than many other parts of the world.
Okay. On that happy note, Navneet, great to have you in the studios. Thank you so much for your time.
Thank you so much, Aisha. Wish you all the very best.
Thank you. Okay, that's a lot of wisdom, a lot of food for thought, especially the views on AI and how, if the bubble in the US is to burst, how India can be that island of safety, given that AI for us is just at the cusp and a very nascent stage of it all.